dark for me, but that might be my problem.
Oh no, it's there.
Oh,
Brighter?
I see.
Yeah.
Yeah, yeah.
It's just a setting I have on my computer. If I'm away from this monitor, then it dims, but then when I click back on it, it'll brighten back up.
Okay.
Yeah.
Smart.
Just trying to preserve the screen in my eyeballs. All right, cool. So, I mean, I still hit record. I guess the virtual camera inside Discord is just it's not liking it. So that's why I just took the virtual camera off. Hopefully, it picks up my audio still, and then we can just go from there. That's on a chart. Okay, cool. Let's get rid of that, and let's get rid of that. All right, back. So, Ryan, you there? Yeah, I see you there. Okay, cool. What I was saying before was when we're looking for these liquidity pools, you can start off with a 4 hour or go higher. But once you start going higher, you want to work your way down because you'll find stronger entries, like more refined liquidity pools, if you will. So in this particular case, you can measure from this body, end of this body, to the bottom of these bodies, because this is where we got a reaction, right? Because price came down, like way down, obviously on Phoenix. This is insane what it did. Came all the way down here to 1769. Pulled back up. So we have a reaction right here. This is a long-term support line. Basically just liquidated everybody that had orders right here that were waiting for this bounce, liquidated them, brought it back in. Everyone got right back in, liquidated them again down to 1810, and then came back up. And so when it came back up here, and then it started making its move back up, this is where I'm going to be looking for my liquidity pool and or order block. And so if I'm starting to refine that, I go from a 4 hour and then I'll jump right to a 45 or a 30. And I just want to refine this a little bit more. So if I look left, I can see where all that reaction is coming from. It's the reaction candles. It's the imbalance candles that gave me my move up, right? So what I was saying before is these candles, these long wick candles, these are not going to be your liquidity pools. One, they're way too large. Two, this is just imbalance. And three, ultimately, it's going to get filled at some point. We just don't know when. But at some point, this area will get filled again. All right. So I refined a little bit more. That's where my 4 hour was. I'm going to come down a little bit lower, come down to a 15-minute. Yeah, that's where I was. See, it was the 15-minute that makes sense for me for this to be the pool because of these two candles right here. Let me just move this out of the way. See these equal lows? Those equal lows right there, it's a sell candle immediately followed by a buy candle. Right, so this is imbalance. And you can go as far as bring this one up. So you see this little, see this little candle right here, right where this sell candle began? Right there, right on the body of that. Right there. And then I would bring this up a little bit more just so I can be anal with it. Right to those equal lows. Here's the reason why you're looking for those, because when you have equal lows, that's your market makers. They're driving the price to a specific area, and then they're literally buying that area, and then price shoots back up. That's not going to be retail. That's going to be your institutional big banks, people with a shit ton of money, their goal is not, hear me out. Their goal is not to make profit per se. Their job is to collect orders. So, someone seeing this, we had a big spike down, we came here, then we had a rejection around here. Most sellers would be like, "Oh shit, I'm gonna short this again because we're gonna come right back down to here." And depending on the time frame that they're working, this is a sell candle, and so this right here followed by another sell candle. You had sellers walking into the market right here. Then Money Man just said, "Nope, I'm taking all these orders," and literally wiped out everybody that came and tried to short here, and then everyone that shorted here, just clean their clock. Same thing with here, right? Like this is a long-term support that turned into a liquidity area. Like it just flash dump, flash dump, flash dump. Right. So when I'm looking for these areas to tap into, like this one right here, this candle, which turned into, looks like a hammer, but that top wick is a little bit too tall. See, this candle is just a little bit too tall. I would have preferred if this body, that the close was somewhere up here around 40, excuse me, 39. That would have been ideal. Nice long wick, tapped right into this pool, right? Because remember, this was our reaction area before we started seeing a new high, before we got change of characters. This was our new high. So this is going to be a strong area for people to buy into, coupled with, let me go to a 12-hour. This might be easier to see it on a 12-hour. Yeah. See this long-term. I mean, we're clearly in an uptrend, right? So So this imbalance right here, this was filled with wave C on this butterfly, right? But then we still have somewhat of this imbalance right in here. Shit, we can even bring that imbalance all the way over here. And I would bring you to the middle. That's the only thing we have to be cautious about, because this is all imbalanced. So how does it get? Hold on for a second. I gotta go. My 1-year-old was like shaking on the door. All right, so like this imbalance, it's got to get filled at some point. We don't know when, but like I'll give you an example, right? So we hit wave A back on May 11th, rode this bad boy all the way until the 30th. So roughly 19 days, a little bit over 2 weeks, and bam, filled all this. So when you see what looks like geometrical shapes, predominantly triangles, these are going to be your imbalance areas. Now, this is not a triangle. This is more of an arc right over here. But all this was imbalanced. And you can see the sharp move up with a sharp correction, right? That's all this was. This was just a correction. This wasn't a dump. From X to C, it's not a dump. A dump would have to make a new low, which would be, sub, what is that? 1381, sub 1381. Now, coupled with that, we're looking at structures, right? So we have a structure from here. This is a high, and then this is a low. We did make a new high, but this new high is internal. It's inside this higher structure. So what I'm getting at is that the external structure from here to here is bearish. Internally, we are looking for bullish. That's what we're looking for. So when you're making your back down to 40, geez Louise. So when you're making your order blocks or liquidity pools, you want to keep that in mind and saying, okay, what does my structure, overall structure look like? Am I bearish, and like, should I be stacking on for bearish because our overall momentum is going to be bearish and we're going to be looking for a fill somewhere over here? Or can I remain bullish and to see if we can tap into another part of this internal structure, which would be right around here, 1990s, 2002. And we clear this area. I mean, we are still technically bearish. We would have to clear up here, 2150, 2166 plus, for this to be a change of character, right? So we would need technically we would need a close up here for the external structure to be changed. And even so, even if we hit this, anytime you have a change of character, you're always going to have some type of pullback. If you don't get a pullback, then it's going to be a vertical run up, and then with vertical run ups, you have sharp corrections in the opposite direction. All right, so let's come back down to 30 because we're working at 30, 15. So these little areas as well, just keep in mind, when you see a trend line, like, oh, look, that's going to be support, that's going to be support. And then if it just flushes right through it, these are signs that the market makers are in the market right now. They're in the market. Because 99.9% of most folks, they'll base their trades and strategy off of trend lines. There's nothing wrong with that. That's everyone's strategy is like that. But market makers understand that too, and that's what they're going after. So these areas got liquidated. This area got liquidated. This area right here, liquidated. So what we're looking for is we want to be able to hold this line. I think I have a fib from this low to this high. Change you out to a 50. Right, so we need to claim 1844 for this internal structure to remain bullish. If we can't claim it here, then the anticipation is that we should come lower than this, lower than 1811. And so you're going to see a lot of reactions right here, right now. A lot of reactions on 1844. You have a liquidity pool that was just taken out right here. So if market men is out right now and they're out collecting orders, most retail traders are going to be setting some limit orders right here to short. Because logically that makes sense. It's like, all right, cool. We had some support here. Wasn't able to clear it. Liquidated that area. I'm going to short right here. And when that happens, don't be surprised if you just see a nasty candle just shoot right up. So the concept is smart money concepts, if you will. So that helps when you can't find reversals on a larger time frame. What I mean by that is, on my 12-hour to my 3-day, I'm working an anti-butterfly, right? And so I was in at 2012. I closed it a long time ago. And then I just started playing the field from there. So little pumps here, little dumps there, little pumps here, little dumps there. Ideally, if we want to see us get up to this 2000 area, we got to break this band right here, 1874. I mean, I could even make this a larger order block and say all the way up to here, which is like 1913. That's something worth noting. And I had a triangle right over here. Yeah. Because if this line can't hold, if this line doesn't hold, then we for sure should be coming somewhere around here. Which this is a fib. which is a 0.5. Yeah, 0.5 for the external structure. So on an external structure, based on where it's at from a recovery perspective, it's literally come to the 0.5 and then reacted up. If you guys have questions, throw them in. Today we're just doing live trading. I will freestyle, if you will, any ideas or things that you want tutoring on or want to understand better. I'm gonna take this 0.5. Actually, I'm gonna move this 0.5 over. I have a feeling it's gonna tap that, and we're gonna get a reaction here. You can already see it starting to develop because it's starting to create equal highs. This candle though is worth noting though. It's not a hammer because the top wick is a little bit too tall. But I want to say it's a Takuri line. The issue I have with that Takuri line is that it closed bearish. It didn't close bullish. There's a site that I use called the patternsite.com. It has a full index of different candles and formations, and it just kind of gives the ratios on how successful they are. Because somebody else has already done all the back testing on every possible candle and what happens with them, like over 100 trades on that strategy alone. And what I'm getting at is they've done all the hard work. So it's just a matter of finding, there it is, Takuri line. Yeah, see, this could be, yeah, I was right. So this could be a Takuri line, right? A small bodied candle with a lower shadow, at least 3 times the height of the body, and little or no upper shadow. So that's where it looks like a hammer, because a hammer would have no upper wick. But the Takuri line has a small little wick. Price trend leading to the pattern, or at least to the candle, you need to have a downtrend. So there's your downtrend. Second is this trend line. I think I mentioned this before, that like this was liquidity, right? This was seller liquidity. It was hit, people ran it, hit it again, people ran it, hit it again, people ran it, hit it again. Whoever hit it here fucking hit the lotto. Ran it down. It hit it again right here. You can see, and it was struggling to get out. And this is a good example of what I'm talking about, how market makers are hunting those orders. They can see that everyone is watching this trend line. They're like, oh, I'm going to short right here because why not? It's done it 1, 2, 3, 4 different times. I might as well just keep shorting. And so we hit it here, a little pop up to here, and then it came right back down. Orders, 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 orders. And then you get this big giant wick right here, all the way up, just cleaning all these out. So anyone who was shorting right here just got liquidated. Anyone who shorted here, here, and maybe not here, but these all got liquidated. From this point down, got liquidated. So let's see if we can flip it, right? So that's what we're looking for. It's a retest, and that's normal. When we have a specific area that we broke out of, and this has been a specific area for some time now, that we've hit it several times. Let's see, back from July. So maybe not that long ago. Yeah, 3 days ago. So this is 3 days of activity right here. Within a 3 day. One thing we got to be careful with when it comes to this, how fast and violent it can get out of nowhere. Like I have my short set for a take profit in the 1765 area, which is wave A, right over here. I believe Ryan, you were asking me the other day, like, where's that coming from? It's coming from right here. And it, theory-wise, it would make sense because we literally just came right into it. Again, let's go back down to a 30. All right, cool. So it broke an equal high, but it's trying to pin them right here. This isn't retail, right? These are your bots. This is who we're competing against. This is bot action right here. We got to make sure that this can be held. One could even say, okay, let's look for an uptrend. Can we get an uptrend from here? Right? Do we come here and then we explode down? Or do we have an explosion up? And I could already see how that could be confused with a pennant. It's not because of this wick right here. Right? So I can't get a pennant out of it that way. Because that wick, I would need, price would have to have stopped right here. Then we have like this little uptrend and then a possible move back down, which the measure move for that would have been something like this. Right? But when you start to see formations like this, right, and they're taking a, how do I put it, as plain as day, right? You're looking at something like that looks like a triangle. Understand that that is 100% market makers in the market, and so you just got to trend cautiously. We beat them to the punch, meaning we had liquidity pools that were already designed down here. Hold on for a second, guys. Sorry about that. Little man was getting pushed. Okay, so going back to it, right? Like part of the edge is not just looking at structures. Is when you are looking at structures, what's happening inside of the structures on your time frames. So in this particular case, when you're looking at this candle right here, this one, right? I want someone to tell me what that is. You guys should all know what that is. If you don't, hey, tell me, I don't know what that is. Open 1841, close, literally within 2 pennies of each other. Nobody? No takers? No takers? No. This little candle right here, right? This candle, this is the one I'm focusing on. And if you look to the right on my data window, you can see where it opened and where it closed. That's your clue to confirm what kind of candle this is. Yes, you are right that it absolutely. See, it's a doji. Yep, indecision. Um, we don't know where they want to go. So this tells me that retail's piling in, and institutional money is trying to squash them. Now, if we hold this line right here, then it's just institutional flip flopping back and forth. Like meaning, if we get a big reaction from here and then it starts to bounce right back up, then this is this institutional money coming in. See, it's reacting to this trend line that it broke out of. I think this right here was a GYB, right? Because we broke right back into the trend, if you will. So a ton of shorts started piling in. Smart money right here was waiting for that for price to come right down here, and then they grabbed it. That's what these plays look like. I have no idea why why there's issues with the stream. I'm not even. I am recording. Yeah, I'm recording it. Are you guys still having lags, or maybe I'm catching up on these a little bit late?
No, I think we're good. I think that was no message.
Okay.
At least for me, it's good.
Okay. Cool. Thanks, man. Appreciate it.
Mm-hmm.
So let's come down to a 5 minute, right? Lots of indecision areas right here. Like a shooting star, you got a hammer, and then you got excuse me, you got a hangman, then you got a shooting star, then you have another hammer, strong sell candle. I think if it makes another equal high right over here, I mean that just smells like it wants to push down hard. Currently, I'm in at 42 for my long, and I'm still in at 73 for my short. Took a couple hits on the longs from earlier. Some stops out on those, but overall we're fine. Let's put a high time frame for a second. Let's go to a 4 hour or higher time frame, not high time frame, but higher, and see what our reaction looks like here. And so we're in a new candle right now. I think we tap this again right here. I think we tap right in here, giving some room for that wick to come down to here, which is, what does that say? 30.04, 33.05, and 30.04. I think maybe we tap this right here, and then we can make another move back up. Because technically this didn't break structure on a 4 hour. Right, we didn't make a new low. We would have, this candle right here would have to have come underneath this 30 and then close. And then we would have had a break of structure. So from here, this was a change of character right here, right in this area. Push up. That's fine, fine, fine. And now we have our pullback. Just determining if this was our pullback. Or if we have another pullback, which would be similar area, that would create a equal low on a 4-hour. It's not even, but you guys get the point. Actually, I could just do this. So what was that? 1832.51. I'm okay if we get a wick into this. I would like to see this held, because if that's held, then we'll have equal lows, and that's positive. That's positive. Let's look at some other indicators. Kind of give us an idea where we're at. Bearish is F. So more than likely, what we probably get is shit. Is it squeezing? So this is a bullish squeeze, but we haven't lit up green yet. So momentum is picking up on the bull side, which is weird from a squeeze perspective. I don't like the RSI and money flow right now. Money's leaving the market, and strength looks like it's trying to recover. It's difficult to use, base your trade on a RSI on a higher time frame. I would look at a lower time frame, something like a 30, and then kind of gauge from there. Right, so 30-minute, maybe even 59-minute. Yeah, 59 minutes still bearish, but it's starting to recover. Right, this is called a CCI. This is measuring momentum as well. It's very similar to an RSI, right? Like it has an overbought and oversold areas. So this is an oversold area underneath. Like sub negative 100 is extremely oversold. But we're like literally coming right up to it, and then we're flattening out and curving up. Money flow on basically on 1 hour is money's coming back in. It's oversold. So I mean, there's hope. There's hope for longs to activate. But I held a good portion of my short for protection of my long. It's the only reason why I haven't cut it completely yet. The way I'm doing it like in $500 pops. Like if I can hit at least 500 on that trade, then I'll strip it or exit it, whatever the case may be. And that's if I'm hedging. So 500 here, 500 there, 500 here, 500 there. So within a couple trades, we can hit 3-4K. That's the goal. And any of you guys that are like, just doing the 100 to 1K trade, I mean, you're like, Mike, saying you're doing larger trades, understand that. I mean, I do this full time, so 100 to 1,000 is doable. But if I have the ability to do 1,000, I'm going to take that. So you want to adjust your margin and your positions accordingly in that sense. So that way you are just using the margin that you're comfortable with. You don't have to use the exact same margin as me. I am a full-time trader. Most of you guys know that already about me. So as a full-time trader, I'm going to be taking positions that I know that are going to make me profitable inside my home. Now, what's screwing us, or why we have such a huge reaction, has to do with Dixie right now. And it's starting to calm down because it's freaking raging right now. Yeah, it's hitting overbought on Dixie. Right, so this is predominantly due to, this is where we're seeing that delayed dump. But this should retrace back down and test this 50 fib, which would allow us in crypto to get some type of reprieve. I would say we can probably get to here, here. Come on. And this would be ideal. 1918. I could see that happening, to be honest with you guys. 1918, if Dixie comes on down and continues to push down and just tests and holds right over here, and then that would put us, like I said, somewhere in the 1904s, maybe 1918, and then it proceeds to dump again. Right? Because at that point, let's say we bust out of here, then we would have a change of character, right? So, we go from here. It would look something probably like this, to be honest with you. This right here would be our breaker structure. Right? Change of character is down over here, but your breaker structure is right over here. Then once that happens, we'll have a breaker structure, then we're going to have a pullback. If it doesn't continue to keep flying and soaring, but then you'd have a pullback, probably testing here. Oh my God, hold on. I can fix that, hold on. I'm trying to move this damn screen over, thank you. Right, that would be your pullback to, where's that other order block, which is right over here, 1904. Right, we get a sharp move up, create this imbalance right over here. This would be your change of character, small pullback, push, 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 break of structure, retest right down in here, and then go back for that 1904. This would cure this imbalance. It would match the remainder of how price action has been once it gets into this area. Right, so pump down, push up, pump down, push up. Same shit. Same shit. So that's essentially that's what we're going to be looking for. Reaction on that. Let's get rid of this. See, this is, it's not holding that line. Well, we had on, I think we had it on a 30-minute, 15-minute. It's not holding this line. So we had indecision and a strong sell candle, which puts us somewhere right around here. because this is still in balance as well. Just as an FYI, like this candle itself, it's still in balance. And as long as we don't make a new low, then this Takuri line is the reversal candle. You know, there's still going to be orders that are going to be picked up in this area. You know, the goal is obviously to find the one that is the money maker. You know, that snipe shot. But a great deal of patience as well too is going to be needed if you're longing here. If you have an open short, then you're probably feeling a little bit more comfortable. But see these are good reactions. That's a decent reaction. What does that look like on a 5-minute? Good reaction. What are you bouncing off of? Huh. It's bouncing off of. Look to the left. Ah. It could be trapping too, guys. You see how it's now underneath this trend line that it broke out of. And I think the bears want to keep it in there. Hard to see, like hard to use these on, but just give you guys an example of like what gap ups and gap downs look like. You see these little gaps in between candles? Those are your gaps. So gap down, obviously price kept going. Smaller gap down, price went down. Gap down, gap down. But this is also a hammer. This is a hammer, FYI. Right? Downtrend leading into it, that's your downtrend. That's your shaved head. That's your long wick. That's your hammer. This looks like a hammer, but it's not a hammer because the body's too long. Not the tail, but the body. The body's just too big. Now this is a gap up, right? So the next session that opened on a 1 minute, it gapped up. Big gap up. See? Look, that prime example of what I was saying before, like this trend line that we just marked out earlier, I think like on a 15-minute, it's too obvious. And so you have market makers that know that, and everyone that set their stop loss to here, right? They said, I'm gonna set my stop loss here. I'm gonna buy right here. I'm gonna set my stop loss here. Money man knows that. Comes in, takes those out, comes right back in. And when I say money man, I mean the bots. We are hand trading. There are bots, machines that look and hunt for stop losses. Not yours in particular, but just where's the psychology for retail? Where are they going to be setting their stops? I'm going to go hunt for those. So remember, they have tons and tons of money. They run their positions with no stop loss. They don't need a stop loss. They have gazillions of dollars. So they don't have to worry about them being stopped out. They don't. They just have to worry about going hunting the right orders. That's why it's important for us to locate where are going to be ideal areas that institutional money comes in and says, okay, that's enough. Like for us right now, it's this area right here, just based on this activity right here. These are the tells. Right? If you're like, hey, where's the money man? How can I spot them? You look for reactions like this: equal lows, pipe bottoms, shaved bottoms as well. Like those patterns, they don't just come to a halt just on pure luck. They come to a halt because institutional money steps in and starts gobbling up that position. And while people are seeing the price come down, they decide to say, hey, you know what? I'm going to exit my my short, or excuse me, I want to exit my long, and then it just goes right back up. That's why it feels personal for some folks. They're looking at their positions. They're like, oh my god, I'm being hunted. Like they're after me. No, no, they're not after you. They just know your psychology. So you got we have to train our mind to think like a moneymaker. What would they do? Where would they want to get in? What area do they want to control? What area are they trying to manipulate? Like I was saying yesterday, this PA, I think it was over here, like this PA from 25 to what is this, 36, 35? Like this is nauseating. You didn't know where to go, right? Like, oh, I'm gonna long, and then boom, just wiped everybody out. And then we came back in here, and like, oh, I'm gonna long, and then boom. But there was no like reaction candles here, none. Maybe this one right here, but even this one got punked, right? Because it got punked right here on this one. It's these candles that matter because from here, it's gone up, 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 up. And now we've come in retest, and look where the retest is at. So not trying to sound like a broken record, just saying like this is where you find your strength areas. And I have no harmonics on the higher time frames, just so you know. Like these points right here, like literally wick everything out. So the only harmonic I had was after this shit calmed down, and then I mapped out a cipher from these points right here. I mean, this is only on lower time frames. That's just to get us to these areas. Short-term reversals. Short-term, short-term, short-term. Yeah, but what? See, I freaking knew it. See, another equal high. It's got to punch through this, guys. Like to get the results that we're looking for, it's got to punch through that. Yeah, 100%. Having a hedge, it's one of the reasons why I like hedging because if I have an open hedge, it gives me the opportunity to find a sweet spot for long. Let's say I want a long, but I can burn positions. I can lose 30 here, 40 there, 70 there, 80 there, 90 there. It doesn't matter because my short's going to absorb all of that. I almost feel naked if I don't have a hedge open. That's just kind of how I trade and where I'm at. You guys got any questions for me? Anything I can answer? Like I said, we're just kind of free-forming this one today, just applying some of what we've learned thus so far, and what to look for, like psychologically, candle-wise. But anything you guys have questions on, like just shoot. Like this is what makes this server unique to you guys is that you'll have someone that will sit with you one-on-one and go over things with you one-on-one. What up, Wingman? Welcome to the fiesta. So we could actually maybe do this as a possibility. Yeah, I almost want to call this an equal low. They say it couldn't be an equal low because it didn't find quality there. But I can move it on up right here. And someone could even say you could even track this as a potential order block, right? Because you had a strong sell candle, then you had a strong buy candle. And so if you measured from here, in my opinion, it would be early, right? And I'm not saying that this is wrong to make this as an order block. I didn't mean to do that. Okay, so this is a good example of what I was talking about earlier. It's where you find that imbalance in between is where you can set up a good order block, or at least a decent one. So someone that say, hey, I want to get in, where do I find my entry? It's really easy, honestly. That's what you're looking for. You're looking for the imbalance. If you're not already playing a pattern or anything like that, let's say you're just going straight off a structure, you're just looking for the imbalance areas, and that's where you would be getting in. Push, 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 push. Do it. Break the equal high. But what I was saying is someone could even come in here and say, I want to make this my order block. I would not disagree with you. I wouldn't knock that. It's just how strong do you want it to be? So I'm taking that one off just because I'm not using that one. We already have one down here. But this is for like latecomers, right? Who are like, oh man, I missed my opportunity to long. Where should I be looking in for longing? What's a good spot to be longing? Right over here. I mean, it's funky. We don't have equal lows per se, but we do have equal lows based on this candle and then based on this candle. And this is a good reaction, right? Shade bottom, push down, flush out anybody that decided to take this as an order and then flush them out and then move back up. It's now breaking these equal highs. Remember I was saying earlier, like you got to look for that formation because market man is literally baiting these shorts right now. Here, take this. Take it. Take this short right here. And they're getting punched. Right? So now these equal highs, now that they just got punched out, if it can come up to here, back up to liquidity, this is no longer an equal high for me. This will now become a liquidation area. That's bouncing off of a fib. Yep. Remember our 0.44 fib? It's reacting to that. So I'm anticipating shorts to try to come in here right now. That's exactly what it's doing. It's gonna be a hard area to hold. Remember, that's where this fib is measured from. It's measured from this top right here. To this bottom, right over here. Right? That's your internal structure, if you will. So this is your high, and then this is your low for this internal structure. Oh, did it punch through? Hey, look at that. They're going for the reclaim. All right, bet. Market man's doing their job. They just liquidated this area of equal highs. They're now going to start liquidating these 0.5s. That's good momentum. All right, let's check indicators, right? Lower time frame on a 5-minute. Money flow overbought. That don't look good. CCI pump looks like it's just beginning. And the squeeze hasn't finished. So that tells me we have possibly another push down to here. 1840. Maybe even that order block that we just made. Right, because it's only had one reaction. So maybe it gets another reaction, and then we move back up. I'm purely basing that off of squeeze. Right, it's an indicator that's going to kind of give me an idea as far as what momentum and volatility looks like. And if I have these purple dots, let me open this up for you guys. If I have these purple dots right down here, it's how do I put this? It's still in an accumulation phase. It's when the dots turn green that bearish or bullish, whoever's in control, is in full control there. And then when the dots start turning darker colors, then that's when they're losing momentum. So let's say these colors remain dark and then the momentum starts to come back down, then it's going to come lower because it's losing strength and it's going to lose strength quickly. That's if I'm just basing this off of a squeeze. But I haven't lost momentum. And volatility, strength is growing. That's why you see the larger candles on a squeeze. So they're squeezing harder. In layman's terms, they're just squeezing harder. And again, I'm basing this off of 5-minute. RSI is picking up some strength. Still bearish though. It's not RSI, excuse me. MACD. Still bearish. Because if you're underneath the zero, right? If you're underneath here, here's your MACD, it's your white line, then you have your signal line, right? And so it's bouncing off of it. There's some separation, which means there's room to grow. But to be completely bullish and actually consider yourself to be bullish based on a MACD, you have to be over this zero line. Anything underneath is considered bearish. So, I mean, this MACD can come right up to the zero line and then bend and then come right back down. You know, it's done it several times. And same thing for RSI. RSI is fighting for its life. Money flow's coming in, but quickly money's going right back out. Strength is picking up, but this could create a divergence. When you see money coming out and then RSI picking up strength, it could create a divergence. So we get like a nasty wick, you know, something up to like 1855, and then it does a full retrace right back down. I don't think that's going to be the case on a 5-minute. I think all those early, those late shorts are now getting pinched. Yeah, see, look. Same time frame. Like I said, now we turn green. See these dots? Now we turned green. We just flipped green. Boom. Now, and a buy signal just popped at 1846.75. So they're squeezing. They're probably going to come back and test these equal highs where liquidation was, and then proceed to move back up. What I don't like is this shaved head right here. And then the shape, is that a shaved bottom? No, it's got a, woo! Look at that. Nope. They're baiting. Baiting. Where were we on? Yep. That's mean. They literally just liquidated that whole area and then pushed right back down. Again, we're bouncing off of this trend line. We're finding some bounces in that area. Mm-mm-mm. And a sell signal for a 4-hour short. And we said we have a potential pullback. This is our potential pullback area. It's just tapped into. Mm-mm-mm. Yep. Look at that. That just closed me out on my long. That is a huge bait. They baited the shit out of everybody. Yep, bears definitely woke up. I'm so glad we have our head short. They just punched through this pool. And they're grabbing here. Mm-mm-mm. Look at that. And they're pulling right back up. That's crazy, 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 crazy. All right, so this pool just got liquidated. So we need a new pool. Beast. So what I'm looking for right now is I'm looking to see if it's gonna hold this area, which is 21, or if we're going lower down to 13. Honestly, I think we might hit 13. What's a 4-hour look like? I mean, honestly, the next move would be fucking somewhere around here. If it really wants to just clean everybody out. But that whole move on the lower time frame, that build up, it was just like what we saw at like 1859 before it nuked. But there you go. There's your literally equal bottoms. Man, I was brutal. All right, let's clean this up. Any questions? Anything I can answer for you guys? Let's see. Yeah, I mean, shit, it might even go lower than 1805 if just the way that it's acting and reacting. It literally this just closed off this entire um, gap. This whole gap is just now filled. That's what they came for. They came to fill this gap. Oh, thank goodness for the hedge short. Excuse me. Thank goodness for the long. Oh my gosh. Thank goodness for the short. Yeah, they could be. They could be. Yeah. So we have a whole. This whole area was just filled like liquidated, liquidated, liquidated. Anybody that literally just came here to 0.5 who was entering just got smacked hard. Only thing that we need to note that we have to pay attention to, like if this candle reacts and goes, let's say it goes back up and it finishes bullish, you have a sell candle, then you have a bullish candle with equal lows, tight bottoms, if you will. That's rough though. I'm up about 700 on the short right now. And I've lost about 180 on my longs being stopped. Let's transfer something over from. What is this area here? Which is I had 1824.84. Was a strong area because I had a fib right over here. Look at that. It's doing its thing. I don't know if it's, I mean, it could be baiting longs. It could also be baiting shorts here in this area just because of the reaction. mean, the price action from, yeah, right over here, I mean, that's pretty significant. It just filled a gap from the pump that we just had from yesterday. Yeah, so all this is filled. Which is so laggy. I don't know why it's doing that. But all that's filled. Let's go to 1 minute, see what that looks like. Yeah, it looks like they just literally just flushed everybody out. Yeah, they flushed everybody out that was buying in this area. So this is actually a liquidation area now. Yeah, my screen is so laggy. It's difficult just to click on something. Oh my gosh, it's still giving me the. I don't want the dot, damn it. Move you out of the way. You are now liquidation. There we go. And that's on a 1 minute. Let's go to 15 minutes, see what that's doing, if it has any other different reaction. So you have a bearish, you have a bearish, now that is a bearish engulfing. That's what this one is right here. Because it's engulfing the preceding candle. So this is your bearish engulfing. Your bearish engulfing is going to be a continuation pattern. So the continuation just could have been to here, and then we have a reaction, then we move back up. If this candle matches it, you know, body for body, I would lean more towards bearish just because the recoveries. Okay, so pull back. Pull back. It's worth noting that here was a change of character. Topped out. Here is a break of structure. We would need to close beneath here, like a strong candle close and hold to have a change of character. To get confirmation that we go, you know, somewhere around here, 1775. But what all we've gotten thus so far is obviously a dip, pull here, pull back, bearish retest, pull back. If you want a safer entry for a long, if you didn't gobble this up over here, you'd want to wait till 1844 is reclaimed. So we push up, then get maybe another reaction here, and then you'd set your limit orders for here. That would be a safer bet if you don't want to take high risk longs. right. I'm gonna hang on for like about 10 more minutes and I'm gonna grab something to eat. I'll probably come back to streaming, but for like education and recording purposes, if there's any questions about what we saw today, you want me to cover anything, or maybe something from an old class, you're like, hey, I'm seeing what you're implementing, but can you dive into a little bit more? Throw it in the chat or just hop in here and fire away. Happy to answer that for you. Shoot, so I might even well just say, what does this look like? I know you took the long. I figured you took the long. I took the long as well too at 28. Just so you guys know, I took it at 28. And I have another limit order ready to go at 24.84. What's crazy is I already had a 1824.84 mapped out from like weeks ago. And then when we had this dip, and then I found the cipher, 1824 just so happened to be an entry for that. And I didn't take it. Or at least I didn't have my limit orders ready out there. Let's see what 4 hour looks like real quick. See, it's done that yesterday. You look at higher time frames, it's pushed against this this support line, pushed out of it, but it keeps recovering back into it. So it's something worth noting, like if you're trying to track like support areas, like we have where the wicks can come to. Like I think we've mapped out where these wicks can come to because we come to a 15-minute, we can see the gap filled and all that jazz. All right, I'm gonna take off this 35 because I don't think it's serving any purpose right now. And then this pull just got already chucked. So I'm gonna go ahead and get rid of that. There's liquidation there. So I'm basing my thesis off of this is filled. Right. And so now the bulls can like step in and say, okay, we're gonna go higher now. That would be my theory, is that we filled this gap, filled this gap, and now we should try to hunt in. Ideal would be to fill this gap right over here, and I'll show you. This area right over here. This is imbalanced, so like it's got to get filled at some point. Same thing with this down here, right? Like it's just a matter of which one's going to get filled first. Like, are we going to be able to make a move back up, or do we come back down and fill in more gaps that are below? right? Remember, because we had this big giant imbalance. I mean, all the way down to 1635 area, right? We just got to be on the sticks for that one. Keep your short. You know, if we can reclaim this 44.46 and we can reclaim it with, you know, with aggression, and we can violate those areas. Why is this taking so long to zoom in? Jeez Louise. Then I would probably clip my short around here and then just, you know, ride the long all the way back up. 100% on the long puts me at 1853. So just above here, right around here. If I were to take profit on the long. That's pretty good reaction here, guys. That's a good reaction. All right, let's see. I can answer like a couple more questions real quick. Yeah, they're trying to suppress it here. They don't want to give them access. I mean, that trend line that we are talking about just now before, where we get a big reaction from, like it wicks out of it, but then it price pulls back into it to land on it for support. It's done that several times, actually. Yep. Reaction. Yep. Yeah, I think the long can be built in this area, in these areas, right? Like catch your wicks right over here. You know, possibly we touch here again on 24. Coming back down to, let me bring in that 59-minute. But if it wanted to go for an equal low, we got to be ready for that, which is right there. This also fills the gap. So either that fills the gap, or this fills the gap. I want to say it's filled here. Good question, Ryan. So when you're looking to see which balances are going to be cured, if you go to your higher time frame, like let's say we go to a 12-hour, right? We know this area has to be filled, and so if my external is bearish, what I want to take a peek at is I want to look at my lower time frames to see if I can have um, bullish movement, because the bullish movement doesn't necessarily mean that it's a reversal. It just means that it's going for a pullback on the bearish side, meaning a bearish retest before it comes back down again. So I'm looking at my lower time frames here, saying, okay, well, I just had a spike up, right? Because I have my external structure, but I also made a low here based on these moves. And then I also made a high right here. So this, from here to here, this is technically my internal structure that I'm working and operating off of on the lower time frames. If I start to see, momentum coming down even harder, then I know I go to my higher time frame and know that, okay, it's filling in the gaps for the larger time frames. But as of right now, it's filling in this gap. Because it came to this area, a halt, and then started pushing back up. I mean, that's a sell signal. That's a buy. Excuse me. That's a sell candle, followed by a buy candle. It's got 11 minutes left inside of that candle on that session. But we can't really predict where PA is going to go, right? So the best that you can do is work with inside the structures and see which one's going to fill first, and then align yourself with that position. So I think you have a pretty strong short from earlier up top. I would wait for the reaction here based on internal structures. If the internal structure can reclaim this 1844, then I would remain bullish until we get to around 1878. If it reclaims this 1878 area, then I know it's gunning for this area over here, this imbalance over here, which is like 1893s all the way up to like 19 and some change, like 1904. And so that's where the 0.5 fib comes into play, because you're measuring from this low to this recent high. Because remember, this broke structure, right? So since this broke structure, I technically have a new high in my internal structure. So that's where my measurements come from, and those are the time frames that I'm going to be operating off of. Now, if I get all the way up to, like, let's say 1993 for whatever reason, then I'm looking to short that, because that's still inside of the structure and it's still bearish. If I bust out of like 2100, then I have a completely new change of character, and then I'm going to be looking at bullish frames. So it's just difficult as far as figuring out where you want to be on that. For me, if we can close above 1844, then this internal structure is now flipped bullish. And it hasn't flipped bearish, just so we're all on the same page. This structure has not flipped bearish. This is a pullback from this high. Because look, this is your low. You would have to have a push down beneath this and close for this to be bearish continuation. So we just needed to hold these areas, get up to 44, possibly. Ryan, does that answer your question? My bad, man. I don't know if it does or doesn't, or gives insight to it. Long tail. Look at that. Yeah, nice long tail. Yeah, this is man, this is gonna be a hard one to get above. Just based on a 4-hour, that just looks tough. Or I mean, we're only 2.5 hours left in this session. That has me kind of leery. Same on the 59-minute. Yeah, strength just picked up on here. Entering into oversold on a 59-minute, but I mean, it's got some more wiggle room. It's got some more juice that it can push down on. So just be on your sticks when it comes to your longs. I would move my longs to break evens. You know, and then obviously only buying if I get in at a lower entry than where I was at break even. Let's say it hits your break even and then it keeps going. Don't FOMO in. Wait until it can reclaim 1844. Because if it can reclaim 1844, right? Not a wick, but we're talking about a body. You need a body over this. Then you look into adding to your longs or opening a long from there, a more safer route. But I don't think it wants to play, to be honest with you. Just looking at a 4-hour, I mean, great recovery here in this area. I mean, we've gotten quite a few recovery areas, but we're also not making exactly new highs here. Ideal would have been something up here, 1885, 1888. That would have been ideal. Then have a pullback, say somewhere around here, and then proceed back up. I got you, bro. Are you muted? Hold up. Let's see.
No, I figured it out.
Oh, there you go. Okay, there you go. There you go. All right, bet. So it just depends on the time frame that you guys are working. I'm working 3-day, 12-hour, 4-hour, 59-minute, 30-minute, and like a 5-minute. Mainly sitting on like a 15-minute, to be honest with you, just because you get a little bit better grasp of where it's going. It's a short enough time frame for me to figure out, okay, where the pull areas are going to be. Oh, yeah. And now it doesn't want to let it back inside this trend line. It's so funny. It did the same shit over here too. And then it had a massive push down and then a massive giddy up, if you will. Yeah. Market makers are out taking strolls today. I'm telling you. You just gotta be on the sticks when it comes to your longs. You should be Gucci. All right, guys. I'm gonna go get some grub. That was a 2-hour stream. Everything. This one was recorded, so I'll put the recording up inside the chat for anyone that wants to come back. But any questions, just drop it in the classroom. I'll be back in like 20 minutes, 30 minutes. I'm gonna grab something to eat. I'll still be watching the charts, but I'll just be grubbing. No, you're welcome, guys. My pleasure. I'm glad that you guys are participating. You guys are here. This is essentially what you pay for. So you have someone one-on-one walking you through it. Always ask questions. There's never anything such as a dumb question. Just always feel free to ask until you get it. But other than that, I'll be back in like 30 minutes or so. Get something to eat. If you guys haven't eaten, I highly suggest you guys go get something to eat too. Peace and love, guys. Peace and love.